I'm speaking with Russell Hackmann, CFA and president of Hackmann Wealth Partners. Russell, good to see you again.
Nice to see you again, Chris. How you doing?
I'm doing well, thank you.
Good.
Russell, what is your view on the recent Federal Reserve FOMC meeting and how it relates to inflation?
Well, there's a few interesting things going on, both about the Fed and as it pertains to inflation. First of all, it's quite clear from, what the Fed is saying that this path that they had been on to cut rates is pretty much over. And in fact, you had one of the Fed governors, Kashkari, say, "Hey, I think we got to start saying, we don't necessarily know if the next move is up or down." Right? And that's a pretty big statement. I think it's reflective of this increasing inflationary environment that we're in. I think some folks are like, hey, maybe it's just sort of a temporary thing as it pertains to, the price of oil being up, and hopefully that'll calm down, assuming we get some resolution in the Iran war. What I'm hearing more is that, gee, the sort of the impact of higher oil prices, and you've probably heard this as well, Chris, that oil is a part of so much of life, and it pertains to not only your price of gas, obviously, it's the price of the price of the energy to keep your house warm or cool, the price of your food because of fertilizer, and other things. So, you know, I was looking even at some of the prediction markets. They're saying it was like 60% chance that inflation may hit 4% this year. So, that's a big deal. We saw inflation really spike. And again, even if there's a resolution in the war, relatively soon and a good resolution, that's likely to persist for a while.
Given that backdrop, what are some potential investment strategies and financial planning strategies to consider?
Well, I think that this particular environment right now is, I talk about sometimes on my radio show that, sometimes the wind's at your back, sometimes the wind's in your face, sometimes you just get the wind going in all directions. So right now, as it pertains to like the stock market, you've got tremendous earnings, but also rising inflation usually isn't a great thing, especially if it really pops. We saw that last in 2022. If you really get a pop in inflation, that could be a negative for the equity market. But overall, long term, equity should be a good hedge against inflation. Now, against that, you got some valuation issues, like the so-called Buffett indicator, which is the ratio of the total market capitalization of U.S. stocks to GDP, is at all-time highs, like higher than 2000, higher than 2008. So you've got some valuation things to think about. But higher inflation makes you, definitely think like, hey, if I have like a traditional like 70-30, 80-20, 60-40 kind of stock bond mix, which a lot of investors have, in many cases they're in bond funds, and those bond funds are basically all down this year, and they're going to do worse if interest rates continue to rise at 10 years up to, 435, 440. So certainly changes your investment strategy. Overall, our view is, yeah, we like stocks, but we also like strategies that give you some protection against the market falling while allowing you to benefit from additional growth. We also like income strategies, making sure that folks are going to have adequate cash flow in retirement, especially when you run out the numbers. If you got 3.5% inflation for 20, 25 years, you're talking a 2.5 times increase in prices, right? So imagine that over the course of your retirement. that prices could double or, one and a half times. That's not great.
This is a lot for people to consider, especially given the fact that we're hearing conflicting things, right? We're hearing that the stock market is at all-time highs. We may have an AI bubble, but outside of tech, stocks are looking healthy. Then you point to the valuation, the Buffett rule. Yes, like there's a lot to consider. And on top of that, for
Yeah.
retirees, people are living longer. And so when you think about inflation over even longer lifespan and what people think their money is now versus what their money will be throughout that, it is definitely a lot to consider. So thank you very much for all of this.
Thank you, Chris. Have a great day.